Well, the bottom line is that they only change a tactic if they need to, if for some reason they're not getting the desired result. Now, how do you know that? By measuring performance. There's no other way of knowing it. They know that they are just a 200-second off their best time. And they know that if they just, there's something they need to change. But it's not guesswork. It's not just a matter of, let's try this, let's try that. They break down that information, they break down that analysis, and they look at it and say, right, there is what we need to do. We need to do this. And if we do that, I reckon we'll get our 200ths of a second back on every lap. And that's what it boils down to. That's what I'm getting at here, is that to change tactics, if something isn't working for you, how do you improve on that? The only way is by analyzing information, not guesswork. And that's what annoys me so much with so many traders, that they trade a system, they have 3 or 4 losses. They've got no idea why, whether the systems failed them, whether it was just market conditions, whether it was them emotionally. And now the first thing they do is they change tactics. And not only tactics, they change complete systems. They jump team, they go and race in another team completely and drive another car without trying to fix the problem where they're at. Right. Okay, let's move on. Alright, let's have a look at this. I don't want to say too much. I wrote a lot more down here, but I know that you know most of the stuff by now, so I'm not going to repeat myself. I'm already frightened I might have repeated myself too much in this course. What is a trade planner exactly? Okay, well, what I've said here is that it's more than just about your system. Okay, it must encompass everything that you do. Everything that you do and everything that you think. Alright, it must tell you exactly how you're doing it as well. Alright, so what it's got to do, it must measure everything that you're doing. It must measure everything that you're thinking. Now that is where people go wrong as well. They forget about that. But the fact of the matter is, you either exit or you enter a trade for the reason that's in your head at that particular time. What were you thinking? That's the reason you got in or out. You might have had the criteria all lined up, but your decision came from thoughts. And what were you thinking? Because if you don't write that all down, it might have been something else. As I said to you before, I have often got out of trades prematurely for other reasons. I didn't realize it. You know, I sort of got out and then I wrote down there, well, because I had to do something else. And then, you know, you look back and you think, okay, hang on, what's happening here? I'm getting out because I want to go and do something else. 5 occasions, for maybe a point of reference, the trade went to my predicted target, and so perhaps I lost 300 pips from those 5 trades I left on the table. The thing I was rushing off to, could it have waited? You know, why was I messing with my trading for something else? Maybe because I'm not disciplined in other areas of life. Maybe I haven't managed my time adequately. Maybe I haven't broken my day into a comprehensive structure. That's the type of thing you need to do. Dig deep, look around, look outside of the system, and realize that everything interacts and integrates and interacts with each other. All right. All right, so it must, 1, ensure you stay focused. It must, 2, develop consistency and discipline. It must, 3, measure effectiveness. It must, 4, manage the risk parameters. 5, manage the trade parameters. Okay, the actual criteria of your entry. 6, outside parameters, outside of that trade. Now, this is where people sometimes get confused. The trade planner is not about your system. It's about you as a trader and every aspect of you as a trader, not just the system. Right? It must look and measure the time frames that you're trading, not the time frames on the charts, the time of day that you trade and that you seem to do best at. It must also measure distractions. It must tell you when you're being distracted and when your trading environment is not conducive. And you might pick up certain days are trouble days, and then you realize, hang on, those days are always my worst. I'm going to have to avoid trading on those days. It must measure costs. It must measure fatigue. It must pick up when you're emotionally drained, when you're tired, and see if there's patterns in there as well. Maybe you don't trade great on Mondays. Maybe you trade worse on Fridays. Right, it must also, 7, control emotions and responses to those emotions. 8, show you where you went wrong. What's the point of all this? If you haven't got an outcome, if you haven't got a result, a tangible result that you can now analyze and apply. And 9, it must tell you what you're doing right as well. Alright, it's going to tell you what you're doing wrong. It's going to tell you what you're doing right. You need to focus on both of those aspects. Right, that's a trade plan now. That's what it needs to do for you. You must also look at the bigger picture. Right, it has to do this, and this I've said here, but it must be specific, so there's an exact measure of criteria in accordance to your trade system rules. Right, it must be based on good, tactical, sound trading principles. And it also needs to analyze the broader picture. I think I've mentioned this before. I think it actually calls for some sort of patent. Zones and triggers. That's the way I trade. Zones and triggers. That's the way I see the market. That's the way I see everything. There's zones. Right? There's areas within the market that you can analyze through analyzing various time frames. That you'll find support and resistance in the form of horizontals, previous price action, Fibonacci, retracements, coming up against trend lines. If you can find a confluence area of several factors across several time frames, that's a zone. Okay, that's a zone. That's an area of almost certainty that there's going to be a reaction. All right, and the more points you have, the more confidence you have, the higher probability you have of a trade. All right, now you have identified the zone. All right, it's like setting up for an ambush or something. You know, you've got to go and identify the terrain, look for the best thing, walk around, find the best spot. That's what it's about. You've got to look and lay in wait for that market to come to you. And then you've got to have your trigger. Right, you've got to have your strategy of how you're actually going to apply yourself when the market gets to you. All right, remember what I said earlier about not chasing the market, but waiting for the market to come to you. All right, that's the way to trade. Right, so zones and triggers. This trigger is the actual system set of rules, and the zone is the area where you apply those rules. That's it. You have to trade like that. You can't just trade with triggers. You must trade with zones if you want a high probability. The higher probability, the trade is, the less emotional it is. All right, because the more confident you are. Focus, to be specific. Focus, that's what it's going to give you, a trade planner. I'll tell you what time frame you're trading, tell you the specifics, the support and resistance areas, the trends, the reversal patterns, candle formations, your trade system requirements, and then it must tell you the context. Alright, so other than those specifics, the bigger picture, what else is happening that might trip you up if you don't foresee it. Alright, that's how we trade. So the trigger is the focus, the zone is the context.